Good afternoon, everyone. This is Christian with PerfectStockAlert.com, a 100% free service for smart investors and traders. All we ask in return, please refer a friend. As you guys know, every single week I like to go through on the weekend and run my value scan looking for long-term investment opportunities that I might find in the market. And I've got one for you to look at today. It's Freeport-McMoRan Copper and Gold. Ticker symbol is FCX. It's right here. This is a 10-year monthly chart of this particular company's stock price. Like I said, it's monthly, so every one of these candlesticks represents a single month of price activity. Right now, we are selling off ever so slightly right here, and you can see that we have book value marked at $16.50. That's what the current post is on that. And we're going to look at the fundamentals now and see what we actually think about this company. And I can tell you, you will probably already know that I like it, or it wouldn't be in this video. Okay, here I am on the Yahoo Finance page. You can find this information anywhere. Like I said, I'm on Yahoo Finance. You can find it on Google Finance, and your discount broker will have this information available for you as well. I'm just going to use Yahoo Finance as something everybody has access to. The Freeport-McMoRan Copper and Gold summary page will show you a couple of little details that are nice to look at. First, you can see the closing price at $38.78. You can see that we have a dividend yield 2.6%. We like that. Earnings per share of $4.78. As I've mentioned every single time we look at this, Benjamin Graham, Warren Buffett's teacher, wouldn't even consider a company that didn't have an earnings per share of at least $1. So at 4.78, that's fine. That's everything we're looking for. A PE ratio of 8.11. I love that. And below 10 is a great opportunity to be looking for a buy opportunity. So I'm definitely interested in this company. I want to look a little bit deeper into it. Just look at a few key statistics to get an idea of the quality of the management thus far. Okay, before I get into all the key statistics on this company, remember, anything that I cover here that you don't understand, you can go to our free website at PerfectStockAlert.com and watch a video covering the particular key statistic that I mentioned here. And most of them are already on our free website. There's a video teaching the different information that I'm going over here. So I may, give a summary of what it means, but I won't go into complete detail because you can simply educate yourself on the page and then you'd understand this video better, right? All right, so let's move on. The first thing we want to note is the market cap, nice $36 billion, pretty nice size there. Enterprise value is $39 billion. And we're going to look here at the trailing PE ratio is 8.11. We like that. Basically, we're looking at PE ratio. We want to find something at 15 or lower if at all possible. If that's not out there, I'm not interested. I want something undervalued. That's the whole point of a value investment opportunity. Forward PE ratio is showing us 7.19. Of course, this is based on someone's projections, so it's not as trustworthy as the trailing PE ratio, which shows us what has in fact happened. The forward PE ratio does tell us, though, that they expect to do better in the future, short term, than some companies that would have a higher forward PE ratio would be telling you the exact opposite, that they expect to do poorer in the future. So this is something that we like, actually. Let's look now at a couple of financial highlights. We can get out the tools here and draw these out for you. Profit margin is 21.8%. I like that. Could be better, of course, but it always could. But at 15% or better, I'm interested in looking at it. Return on equity is 34%. We like that a lot. Operating margin is 43%. And these are all items that are covered on our free website at PerfectStockAlert.com. You can look into the particulars there. Let's see what else we got here. Quarterly revenue growth year over year is down 25% as of the most recent quarter, but this data is being pulled from. Clean that up again. I just marked it over. It's down 25%. So that can be some of the reason why you're seeing some sell-off in this stock, or not seeing as rapid an advance in this company as you might see in some others. There's some short-term bad news, and that's, of course, going to have traders selling stock. Quarterly earnings growth year over year is down 58.7%. Let's look now at the balance sheet information. That can tell me a lot, especially if we're going to see another double dip in the market or something of that nature. I really don't want to have a company that I'm buying into or considering buying into that's just going to have a real hard time in those recessions or depressions, and that's typically caused by having too much debt. You can see this company right here has a $3.54 billion in debt. It sounds like a lot, but they have a bunch of cash on hand of $4.8 billion. Why does I keep doing that? Anyway, it's basically the equivalent of having a company with no debt, because they can easily just pay off their debt using the cash they have on hand. So we like that. The current ratio is 3.42. As you know, Benjamin Graham, Warren Buffett's teacher, would not even consider a company that didn't have a current ratio of 2 at least, meaning that they could pay their current expenses for the year 2 times over. This one can do it 3.42 times, and that's plenty for me. Book value per share, like I've already shown you on the chart, is 16.5. We like that, so that's fine. If I were to get a major sell-off, and a couple times it has happened where the company's stock price would fall below book value, I would take that as a great buying opportunity in this situation, because the company doesn't have a ton of debt that can sink it. This is actually a company that has a lot of cash on hand and has managed its balance sheet very well, in my opinion. Alright, so let's check out the insiders' holdings and the institutional holdings. We can see here, let me get the tools again, mark that up. The percent of the company held by insiders is a 0.87%. It's not worth mentioning. Percent held by institutions at 75%. That's good. You can see that a lot of people agree with this analysis. Quick look at the dividends to see whether or not that dividend of 2.6% is actually strong. 2.6% is what they're projecting for the future on the dividend payout. You can see that the payout ratio is only 31%. So of their earnings that they get in, only 31% of those earnings are going to pay out a dividend. So that's good. Now we like that. If it were something like 80% or something higher number like that, we'd know that they could be in trouble if their earnings continue to get hit again and again and again, because at some point they have to either lower the dividend at that point or find a way to increase their earnings, or just basically, we don't have to worry about it in this particular situation because it's only 31%, and they have a lot of room there before the payout of the dividend would even come into question there. So that's something to note. Overall, I like this company. It's why I'm profiling it here. But there's a lot you still need to look at. You need to understand the company better than just looking at some key statistics. So this is something I definitely want to bring to your attention. If you're not interested in buying it now, you should do your research and definitely put it on your watch list in case they get a major market crash. You know what to go buy. If you've not been to our free website at perfectstockalert.com, it's right there. It's 100% free. All we ask in return, please refer a friend. God bless, take care, and I will see you in the next video. Please take a moment to review our disclaimer. The information provided herein is our opinion only. Under no circumstances do any statements here represent a recommendation to buy or sell securities or make any kind of an investment. You are responsible for your own due diligence. To summarize, we do not provide investment advice, nor do we make any claims or promises that any information here will lead to a profit, loss, or any other result. These videos are for educational purposes only.